let's say you're a widow, your husband died 20 years ago, you've got a house in Mount Eden which is now valued at $3 million because of the rising house prices. I mean, that person would pay $25,000 a year in tax, right?
It could, if they didn't have the real world income to be able to pay for that, obviously accumulate against the property at the point of sale or at the point of, for example...
But just to get it straight though, so it's on assets over 2 million. So
as an individual.
As an individual. So in that case, the house is worth 3 million. At 2.5, she would pay...
On that million.
Yeah, on that million, but that's $25,000 a year, isn't it?
Mm-hmm.
So what would that person do? I mean, if the person living on superannuation, living in a house, you can't eat your house, you're paying $25,000 a year tax?
As I've just said, that payment could accumulate to the point of sale. So if they don't have the real world income to be able to pay that at that point in time, it could then be paid off at the point of sale or then at the point at which that person passes.
So they wouldn't have to necessarily pay the $25,000 a year
if they did not have that real world income at the time. It could accumulate against that property. But can I just also make the point of the trade-off that we are making here? Because yes, the top 3% wealthiest people in this country will pay that wealth tax. The trade-off that we get for that is that we can end poverty by ensuring that no one falls below the poverty line at a guaranteed $395 per week. We can ensure that we have free GP visits, free early childhood education, that we are restoring our public transport services, and that the cost of living is largely reduced for people. Meanwhile, the quality of life improves and we rapidly reduce climate changing emissions. So that widow that you're talking about will experience a society in Aotearoa, New Zealand, that is flourishing, where people are not struggling to get by, and ultimately that's for the benefit of all of us.
Yeah, but you're putting that sort of person in a pretty tough position. If they had to pay $25,000 worth of tax just for living in their house.
Again, that would accumulate against the property to the point of sale if they didn't have the real world income to be able to pay that at the time. But these are the kinds of conversations that we need to be willing to have rationally as a country. We have had in the past, off the back of world wars and the Great Depression, we created the welfare state, public healthcare, public education, public housing. And yes, we paid for it by higher taxes on those who had profited handsomely during a time of hardship for many. And that is something that we have done in the past and we can choose to do again. There will of course be individual circumstances where specific people feel as though they are disproportionately impacted, and we deal with those issues on the margins. But what we are talking about here in reality is wealth taxes on the top 3% in this country, which then unlocks the resources necessary for all of us to live better lives and for our country to be ultimately happier, healthier, and more productive.